Money FM 89.3. Best of breakfast. Companies to watch.
That's right, that time of the day again where we look at what's on the radar. And to help us out, I've got Dan Koh. Good morning.
Good morning, Ryan. How's Tuesday going for you?
Going pretty well. Actually, I've got to mention, I've been hearing you've got some fans of this segment. And this is one Ding Mei Yan from SGX saying she listens to your jokes and everything else that comes along with this segment, and she loves it. So
wow, thank you. The main purpose of this is to inform about the stocks to watch. But if you enjoy the jokes, then I'll keep it going. Thanks for listening. But yes, welcome to Companies to Watch. That's a segment where we spotlight and stock you up with ideas of companies that will call for your attention. So we're looking at market trends and risks, as well as hidden gems and warning signs to steer clear of. So I want you to be part of the conversation as well. 8855-0893. And tell us whether you think it's going to be hot or not. Ryan, you ready?
yeah, I think you're blushing, but let's go.
I am still blushing, yeah. Okay, it's a name synonymous with the aerospace, smart city, as well as defense and public security sectors. Any clues, Ryan?
Well, it has to be ST Engineering.
Good, you're reading my notes well, Ryan. ST Engineering is redefining the future of technology through their cutting-edge innovations by laying the groundwork for smarter, more efficient solutions tomorrow. And today, it has grown to become one of Asia's largest defense and engineering groups for commercial as well as defense organizations across multiple industries. So, the reason why I've brought this stock up, it's because just year to date, guess how much is already up? 26% to $5.87. And just yesterday, shares of ST Engineering soared over 8% as it continues building on big gains in the past week. And that has to do with its recent earnings report, which revealed that they had a net profit of $365.7 million on February 27th for the second half ended December 31st. Now, that represents a 19.6% increase from the previous corresponding period. So, just to run down what the company did and how it fared for its recent quarter, the company's revenue rose 9.9%, and that was largely driven by the defense and public security as well as commercial aerospace segments. The defense and public security revenue, meanwhile, grew by 20%. Commercial aerospace revenue grew by 5%, thanks in part to the company's integrated aerospace solutions that have enabled it to better capture maintenance, repair, as well as the overhaul spend. So all in all, it does seem like ST Engineering has been performing relatively well all across its board. How do you feel about its performance so far,
Looks
Ryan?
like it's been firing on all cylinders, and I think not surprised when you look at the backdrop of what's been going on. Conflicts around the world going up, so defense spending is a priority in many places.
Yep.
You have public security that's doing well, and smart cities, I think that's also another segment that's growing, and everywhere you look, it's AI and data, so ST Engineering in quite a sweet spot.
Yeah, I like that you mentioned how the likes of tensions and conflicts across the borders is definitely pushing, revenue higher in terms of defense and public security spendings. Now, let's talk a little bit more about what most investors here would be focused on, and that has to be the dividend. And the ST Engineering's board proposed a final dividend of 5 cents per share. That's up from 4 cents per share in the previous year, and of which will be paid on May the 15th, following the record date of April 30th. Now, this takes the group's dividend for the full year to 17 cents per share, slightly higher than the 16 cents per share in financial year 2023. All in all, it does seem like good news, and I'm definitely going to go with a triple hard for engineering, or ST Engineering. What about you, Ryan?
Yeah, I think I'll go with you there because I've got a lot of optimism about where things are heading.
Yeah, and looking at what analysts are calling for the stock today, it looks like Maybank upgraded the stock to buy on the back of continued growth, better margins, and nascent turnaround in the SATCOM business. That's as of February 28th. Maybank and CGS International both raised the stock's target price to $5.70 and $5.60 respectively. Phillips Securities Research, they're slightly more optimistic, raising the target price to $6.10. Analysts also expect ST Engineering to maintain its strong earnings growth momentum through 2025, given its strong free cash flow generation, and they can gradually raise dividends in 2025 all the way till 2027. So certainly looks like good news for ST Engineering right there. Now, Ryan, that's all we have for today's Stock in Focus. And did you know that it was established back in 1997 and was formed by merging 4 listed companies? Are you able to name any one of them?
Wow, that's a tough one. I was in
Anyone, like along the lines of what they do.
ST Smart City, ST Defense, ST...
Think of the skies.
ST Aerospace.
Yeah, very good, Ryan. Yes, ST Aerospace, ST Electronics, ST Kinetics, and ST Marine. Now, the strategic consolidation position a company as a multifaceted engineering powerhouse. So that's that. Now, Ryan, with that, before we end, everyone's favorite segment. What's an engineer's favorite type of music?
An engineer's favorite type of music? Rock?
Rock? Why?
Because it's a lot of heavy metal.
Oh, wow. I mean, you gave the wrong solution, but you find your way to the right answer. It's heavy metal.
Okay.
And that's all we have for ST Engineering.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.